So our requirements at the base is prepare consolidated statement of financial position for PALADIN Co as at 30th September 2011. So that's our year end. I've always emphasized the need for us to be conscious of our dates, because that's going to be the difference between doing the question properly and not. Okay, so let's go to the body of the question and read through.
Okay. Am I audible enough?
Yes, you are, absolutely.
On 1st October 2020. No, let me see.
2010. Let's use 2010.
2010. On 1st October 2010, Paladin secured a majority equity shareholding. Is this Saracen or what?
Sarah Kem.
Okay.
Or you can just say ESCO and we can move on with it.
Okay. On 1st October 2010, PICO secured a majority equity shareholding in ESCO on the following terms: an immediate payment of $4 per share on 1st October 2010, and a further amount deferred until 1st October 2011 of 5.4 million.
Okay.
The immediate payment has been recorded in PICO's financial statements, but the deferred payment has not been recorded. PICO's cost of capital is 8% per annum. Giving the deferred payment a current cost at 1st October 2010 of 5 million.
Okay.
On 1st February 2011, PICO also acquired 25% of equity shares of ACCA, paying 10 million in cash.
That's 1st February, right? 2011.
Yes.
Okay, so 1st February, where are we? We start 1st October. Our year end was, what did they tell us to prepare to?
September.
30th September.
30th September. So on 1st February 2011, and that's still 2011. So that's how many months now? So the whole of February, March, April, May, June, July, August, September.
August. 8 months.
8 months. Okay. So 8 months, that's fine. So acquired 25% equity shares in Augusta. So 25% will generally tell us something like an associate now, Abi?
Yeah, associate.
So it looks like an associate, except otherwise stated. They should tell us something. Once you hear significant influence, then that confirms that that's an associate. So let's go to the next part of the question.
Okay. The summarized statements of financial position of the three companies at 30th September 2011 are shown. Assets, current assets, equities, and non-current liabilities.
All right, so we have all of that. Then let's go to the following information.
The following information is relevant. 1. PICO's policy is to value the NCI. Okay. PICO's policy is to value the non-controlling interest at fair value at the date of acquisition. The directors of PICO considered the fair value of non-controlling interest in ESCO to be 7 million.
Okay, that's at the date of acquisition.
Yes. 2. At the date of acquisition, the fair values of ESCO's property, plant, and equipment was equal to its carrying amount, with the exception of ESCO's plant, which had a fair value of 4 million above its carrying amount. Yep. At that date, the plant had a remaining life of 4 years. ESCO uses straight line depreciation for plant, assuming a nil residual value.
Okay.
Also, at the date of acquisition, PICO valued ESCO's customer relationships as a customer-based intangible asset at fair value of $3 million. ESCO has not accounted for these assets. Trading relationships with ESCO's customers last an average for 6 years.
All right.
3. At 30th September 2011, ESCO's inventory included goods bought from PICO at cost to ESCO of 2.6 million. PICO had marked up these goods by 30% on costs. PICO's agreed current account balance owed by ESCO at 30 September 2011 was 1.3 million. 4. Impairment tests were carried out on 30 September 2011, which concluded that consolidated goodwill was not impaired. But due to disappointing earnings, the value of the investment in ACCA was impaired by 2.5 million. 5. Assume all profits accrued evenly through the year.
All right. Okay, so required was to prepare a consolidated statement of financial position. So the question hopefully doesn't give us any jitters. The important thing we can see is, let me look at the last note 4 again. Impairment tests were carried out at the end of the year. That's the reporting date, which concluded that the consolidated goodwill was not impaired. But due to disappointing earnings, the value of investment in Augusta was impaired by 2.5 million. So that is the associate. The associate's value, as in the investment in associate, was impaired by 2.5 million. One of the things I want us to remember from this statement is there's a difference between saying that Augusta was impaired by 2.5 million, in which case we are going to take our percentage of that impairment. And when they said that our investment in Augusta was impaired by 2.5 million, which means we are taking the whole 2.5 million. I hope you heard what I said clearly.
Yeah.
So there's a big difference between those two statements. If they told us our impairment in Augusta was impaired by 2.5 million, then we're taking the whole 2.5 million. On the other hand, they might have told us that Augusta as a company was impaired, or the impairment in Augusta was 2.5 million, in which case we would have taken only 25% of that value.
Yeah.
All right, so I think we're good to go. All we need to do now is let's just set up. So I'll have to find another way to look at this question.
What?
The scrolling up and down. What's the name again? Paladin, right?
Paladin.
Okay.
PALADIN Co.
All right. So okay. So we just have like what we do before. Open that for all our story. We'll start from the beginning. So we'll have consolidated statement of financial position, right? Consolidated. And you don't have to write this in full under exam condition. What did we say? As at what? 30th September. Ella, are you here?
I'm here, but I'm on transit. That's why I made them.
Okay, all right. I just realized immediately after the class yesterday that I made a fool out of myself. I hope someone doesn't watch that thing and look at me and say, you just don't know what you're saying. But as I checked, I found out that if you write percentage, it will not give you any stress. So that percentage will work. Like you suggested, that I'll just be writing plenty story. So forgive me for wallowing in ignorance. All right, so we move. Thank you, sir. I know you forgive me now. If you were my judge, I wouldn't have problem. I can sin. All right. So we start from the beginning of our question now. So let's read. We'll go through the question from beginning to the end, and then we're done really. Okay. So I'm trying to see. Yeah, Paladin. I hope my question is the same thing with that thing. I'm using my phone. So on 1st October, remember we're preparing to 30th September. So 1st October is exactly 1 year, right?
Yeah.
Yeah.
So remember how we do our working. So we can do work one first of all. So work one, that's group structure now. Uh-huh. All right, so work two now. So work two was what?
Fair value of subsidiary.
Fair value of net asset.
So work two, fair value of net assets. The fair value of net assets of subsidiary if you want. Because I just want to remind you that that is for the subsidiary. So that's work two. Then work three now.
Goodwill.
So work three, goodwill. Then work four. Work four NCI, right?
Yeah. NIC.
NCI, no NIC. So non-controlling interest. Please write them in full until you're comfortable with that. You will not forget. So that you will not write NIC. NIC is something for tax, national insurance contribution or something. And then work six now. Work five. Group retained earnings, right?
Yeah.
All right. So we have everything set up. So if expectedly, we'll normally start our workings maybe with the work six, whatever that work six is, and then fill in the other blanks, and we're fine. So we start our question from the beginning and start filling in as we move on. So on 1st October 2010, PALADIN acquired majority equity stakeholdings in Sarachem on the following terms. Okay, so our group structure is not that. They just told us majority. So I think we'll have to go to the financial statements to see what that majority is. Is that what they said in your own question, to majority?
Yes.
Okay, so if we go to our financial statements, this is interesting. If we go to our financial statements, can we see what happened? If we go to our financial statement and we go to investments, can you see investments? Sarachem, 8 million shares at $4 each. Is that right? Is that what you're seeing?
Yeah.
There? And then how many shares does
Yes.
how many shares does Sarachem have?
10,000.
That's 10 million at $1 each, which is 10 million shares. Do you get that? Is everybody there?
Yes.
Was that a yes?
Yes.
Yes.
10 million. $1.
So 10 million. So if we acquired 8 million out of 10 million, then we know what we have, how many percent we have. So PALADIN,
80%.
yeah.
8.
And the first one is in Sarachem. I don't know whether that's the spelling of Sarachem. Okay. So that is, we know that this one is 80% control, right? And then, of course, it also has in Augusta, which we've just read. So we have an idea that Augusta is 25% and 25%, what's that?
Equity share.
So
Paying
25%
Associate.
associate. That's what I was waiting for. So associate, while for Sarachem, it is an 80% control and a 20% NCI.
Yes.
So that will guide us through our thought. The only other thing I would have wanted to have is what's the date? 1 year subsidiary and 8 months.
For NCFS,
No, for the subsidiary. For the subsidiary, it's a one.
Sorry, Ryan, how did you get 80%, I beg?
They said it acquired 8 million shares, and the total shares in the subsidiary is 10 million. Have you seen that?
I have to go back to the other part. I've seen the 8 million part, but how do you know it's 10 million? Okay. No, that's
subsidiary shares. Subsidiary shares. Subsidiary shares is how many?
Yeah, it's where we have on 1st February 2011. PALADIN Co also required acquired 5% yes for Augusta paying 10 million. Referring to
that part is for the associates now.
No, there's 10. What is the number of shares of the subsidiary? There are three of them there.
I'm not seeing that part.
It's 8%.
Go to the financial statement. Under the financial statement, what is the value for the subsidiary?
The financial statement, I'm just seeing that there's 8 million shares.
Equity shares of the subsidiary. Equity shares of Sarakem. Look under Sarakem. What is under ordinary shares? How much do you have there?
I've seen it. 10 million.
That's it. Is that clear?
Yeah.
So what I'm saying is sometimes they will not give you that information directly. So you have to be able to scout the information and use the information to do what you need to do. All right. So so we have that. So we can put that somewhere on the base to give ourselves guide. Okay, so we go through our question now before let's see whether we can do anything at all in that part. So we look at the top part. Now on 1st October 2010, Paladin acquired secured majority equity shareholdings in Sarakem on the following terms. And the first one says an immediate payment of $4 per share on 1st October 2010, and a further amount deferred until 1st October 2011 of 5.4 million. So we have those two information. So we can go to our purchase consideration for our work 6 now. So just like we did, we can just call this purchase consideration and do 2 of them together instead of separating them. So our purchase consideration, first one is cash. So cash, they said $4 for the shares acquired, right? So our cash will be equal to $4 multiplied
by 8 million.
By, so if we will, 80% of, or 8 million shares.
Okay.
So 8 million shares. All right, so that will give us, so that's equal to, let's remember that we're doing 4 multiplied by 8,000 because we're working in thousands. So let's remember to always convert that to 1,000. So that's 32. That's that. That's all. It's that simple. Then for the second one is deferred consideration, right? Because they are going to pay it in 1 year. They are not paying it today. Now, if we want to do the deferred consideration, the easy way to go about this is, even though the question had given us directly, but we can do it, and let's show ourselves the technique that we need to do that. So if we have a deferred consideration, the present value now, that's what we are going to look for. Present value of the deferred consideration will be equal to